Thanks for joining us today on this edition of Business Daily. I'm Lee Ji-yoon in Seoul. Before we get started, let's first get a quick check of today's highlights. Trading value on the Korean stock market logs a two-year low for December as a number of factors push down investor sentiment, along with the general lag in trading volume. Will oil markets be able to bounce back next year as a deal by oil producers is set to take effect January 1st? We'll sit down with an expert to look at oil prices and the impact on the global economy. Korean markets have seen stock transactions sink to their lowest value in December amid low investor sentiment and the Christmas holiday. But it's a different story over in the United States, which is seeing its stocks rise to record highs. Our Lee Ji-won starts us off.
The value of stocks traded on Korea's financial markets logged a two-year low for the month of December as the investor sentiment remained flat. According to Korea Exchange on Wednesday, the average combined daily trading value of the country's benchmark Kospi and tech-heavy Kosdaq was slightly over $5.4 billion, down 11% compared to the previous month. It's the lowest for the month of December since 2014. The average daily trading value for the Kospi alone was even worse at $2.7 billion, or a 20% decrease from the previous month and the lowest in 3 years. Experts say the prolonged slowdown in trading activity has pushed investor sentiment down as there are no chances of a sudden rise or fall in the market. Seasonal factors also had an effect, with a general decrease in trading volume around the world after the Christmas holiday. Despite the low trading volume, Japan saw its Nikkei index rebound on Tuesday by 0.03%. The selling streak continued until the morning, but with more investors snapping up lower-priced stocks, the index rose overall. Wall Street also saw all three indexes close higher on Tuesday. The tech-heavy Nasdaq closed at a record high 5,487, up 0.4% from the previous session's close. The rise was led by materials and tech companies, as well as the energy firms that rose on the back of higher crude oil prices. Lee Ji-won, Business Daily.
The Korea Fair Trade Commission has issued its largest fine to date to U.S. chipmaker Qualcomm for what it called monopolistic business practices. The fine stands at more than 1 trillion won, or about $850 million. The FTC said that Qualcomm had abused its dominant position as the holder of standard essential patents by forcing mobile phone makers like Samsung and LG to share their patent rights for free and driving other chipset makers out of business on unfair contracts. The antitrust regulator ordered Qualcomm to revise its business model, but the company promised to challenge the decision in court, calling it inconsistent with the facts and the law. The San Diego-based firm is also being probed in the U.S. and Europe and had reached a settlement with Chinese regulators last year. As Korea faces external uncertainties and an economic slowdown here at home, Finance Minister Yoo Il-ho has promised to use all prescriptions necessary to boost the economy. Our Lee Ju-young tells us more.
Korea's finance minister says the government will actively manage its finances and take additional measures based on the economic environment at home and abroad. Speaking at a finance strategy-related meeting Tuesday, Minister Yoo Il-ho said Korea not only faces a weaker growth rate ahead due to a slowdown in consumption and construction investment, but must also contend with external uncertainties like the U.S. interest rate hike and possible policy changes under the incoming Trump administration.
We need to minimize economic uncertainties by using safe, consistent, and sophisticated fiscal policies and use our budget in an active way to boost our economy.
Minister Yoo said the government will set up a committee to systemize the collection of non-tax revenue, which last year amounted to $127 billion, or around 40% of total government revenue. But close to $10 billion worth of non-tax revenue went unpaid last year. So to more effectively collect it, the government plans to create a collection system for non-tax revenue similar to that used for national and local tax. In addition, Yu said next year the government will make available for young people nearly 50,000 additional units of public rental housing at affordable rates. The high cost of housing is cited as one reason for the country's low rates of new marriages and births. And as for the recent outbreak of the highly pathogenic H5N6 bird flu virus hitting poultry farms across the country, Yu promised to provide the farmers with more monetary support. Lee Ju-young, Business Daily.
Korea's biotech industry has seen double-digit growth last year on the back of strong exports of biopharmaceuticals. According to the Trade Ministry, the sector's production levels reached about $7 billion, up around 11% from 2014. Now, this is higher than the annual 7% growth Korea had seen for the previous 5 years. When it came to exports, biopharmaceuticals and biofoods saw the biggest boost. The government said related policies and investments have led to substantial achievements and that it will make full-fledged efforts to establish the industry as a new growth engine. The government-led corporate restructuring drive and the sluggish pace of economic growth are taking a toll on the creation of better quality, higher-paying jobs at larger corporations. Korea's Labor Ministry says the number of new hires that companies with 300 or more employees plan to make from the fourth quarter this year to the first quarter of next year has slumped almost 9% from a year earlier to around 30,000. That figure is in stark contrast with the number of new hires small to mid-sized firms with less than 300 employees plan to take on during the same period. They plan to hire over 275,000 workers, up 4.5% from the previous year. Now, as we reported yesterday, consumer sentiment has dropped to a 7-year low this month. With that, even the usually festive year-end mood looks to be dampened by the series of ills rocking the country. And our Eunice Kim tells us about the shrinking spending hitting businesses.
The discounts on offer in the gift-giving and getting season look to not have been enough to inspire a year-end splurge. Data from two major department store brands Lotte and Hyundai show their overall sales in fact dropped year over year in the months of November through December 21st, a usually strong period for retailers. But the losses are no match to what mom-and-pop restaurants are dealing with this season.
The state of affairs right now is chaotic. We're really at our wits' end. It's incredibly difficult for regular people to earn a living.
The deteriorating business can be confirmed by credit card sales, a preferred form of payment. From full-course Korean or 한정식 restaurants to Japanese eateries, the losses are clear, and for some, in double digits. Delivery looks to have pushed Chinese restaurants over to growth.
We don't get many reservations. We're probably down about 20% compared to last year.
The contraction did not pass establishments that sell alcohol, like bars and even chicken houses. Personal credit card transactions there dropped by 9%, while those by corporate cards also fell by more than 7%. Business owners see the president's impeachment trial and the Saturday rallies that drive them as worsening consumer sentiment, already dragged down by the anti-graft Kim Young-lan law. There's even a survey that shows the deep cut in meal spending after the law went into effect on September 28. Prior to that, 70% of those surveyed said they'd spent more than 30,000 won on business lunches and dinners, but that overwhelming majority shifted to below 30,000 won following the adoption. Add to this household income growth remaining in the 0% range for the 5th consecutive quarter, while household borrowing marches up, and you get a story that looks unlikely to spur consumer sentiment anytime soon. Eunice Kim, Business Daily.
Amid all the major economic events in 2016, the oil market saw its own major development in December, as OPEC and non-OPEC producers reached their first deal since 2001 to cut production. Now, the agreement comes as the global economy has been struggling with an oil glut, which had driven prices down since mid-2014. In fact, levels fell to as low as the $20 range earlier this year, dealing a blow to the Korean economy as well, as major commodity producers saw their economy slide. But now there's widespread optimism that the latest deal may help put an end to more than 2 years of oversupply and push up global prices. So what's the outlook for 2017? Let's take a closer look.
This year, the global oil industry was in its deepest downturn since the 1990s. Prices at one point plunged more than 70% compared to levels in June 2014. Oversupply has plagued the market amid a war for market dominance among Saudi Arabia and its regional rivals, as well as U.S. shale oil producers. Initially, when prices started to fall, many thought that cheap oil would help improve terms of trade and that importing countries like Korea would benefit from lower import bills. But with the global economy remaining slow, the benefits of cheap oil for importers have been undercut by losses of oil producers, further dragging down growth. In fact, the Bank of Korea said there are limitations to the positive effects low oil prices can have on corporate spending and domestic consumption, while Korean exporters continue to struggle with weak demand. A turnaround in all this came this month when OPEC member nations and non-OPEC producers, including Russia, agreed to cut production by about 1.8 million barrels a day beginning January 1st of next year. With that, oil prices have enjoyed a steady rise throughout December, and some analysts even predict that prices will breach the $60 threshold in the first half of next year.
And tell us more about this, Professor Kim Se-won from Ewha Women's University joins us in the studio today. So good to see you.
Great to be here.
Now, although oil prices have been rising recently, but for the most of 2016, oil prices tumbled long enough to affect the global economy. But now, at first, we expected cheap oil prices to actually help the economy, but it ended up being the opposite, right?
That's correct. Low oil price was a good news to recovery of global economy because that reduces the production cost of all goods and services. So in 2014, when oil price began to drop, everybody liked it because it's going to be a savior of the global economy. But it turned out it is not. So there are two major reasons behind that. The first is the oil importing countries did not increase their consumption and investment due to the benefits from low oil price. And oil exporting countries decreased their investment, who are one of the largest investors in global market.
So aside from oversupply, then, what were some of the other reasons behind this fall in oil prices this year?
Well, the fundamental reason is related to the competition between OPEC and U.S. oil producers. The initial reason of low oil price is related to OPEC member countries' effort to disrupt U.S. and Canadian-based shale gas companies. For that purpose, they increased the oil production and decreased oil price down to $30 per barrel. But that really worsens the budget situation of oil producing countries. After that, they increased the oil production further, and continuous disagreements and conflicts go on.
So then how did low oil prices affect different industries and countries?
Well, of course, the oil producing countries are the most affected. We are suffering from 2% economic growth rate in Korea these days. But Venezuela's economic growth rate was negative 10% last year, and Russian economic growth rate was negative 4% last year.
Wow.
And Saudi Arabia is almost in the same situation. On industry-wise, shipbuilding industry, oil refinery industry, and chemical industries are the most affected.
Now, considering that Korea also imports all of its oil, we initially thought that this fall in oil prices would actually help the Korean economy, but that wasn't the case.
Right. In the past, we used to say that when oil price decreases by $10 per barrel, Korean economic growth increases by 1%. But it is not true anymore. So the main reason behind that is Korean consumers and Korean companies did not increase their consumption and investment due to more uncertain economic situation in the future.
But thanks to these low oil prices, Korea has logged a record current account surplus this year. But that wasn't all good news either, right?
Not really. Actually, Korea is maintaining almost 7 years straight trade surplus. But if you take a look at the details and structures of trade surplus, we can see that it is not a good sign. Both of the import and exports are declining together, but import is declining further because of the low oil price.
All right, well, recently, though, we have seen oil prices go up again, but now there are concerns about this rise in prices. Why so?
Well, thanks to landmark effort to cut the production of the oil between OPEC member countries, they decide to cut the oil production from the beginning of the next year. So oil price is increasing, and there is a pressure for higher inflation for domestic price level. In addition, U.S. Federal Reserve will increase interest rate in the next year. Then Korean won will be more depreciated. Then there will be stronger effects on Korean inflation.
Okay. Now, what's your outlook on oil prices for next year and its impact on the global economy?
Well, actually, it is extremely difficult to forecast the oil price because of strong power of the speculators in the market. But if you take a look at only supply and demand side, the demand side will be very weak in the next year. But from supply side, there is a possibility that OPEC member countries decrease their production. However, if price of the oil increases over $60 per barrel, U.S. shale gas producers will produce more. So there is a barriers for higher oil price.
All right, we'll keep our eyes on where oil is headed from here on out. Thank you so much for coming in today.
Thank you very much.
And that wraps it up for today. Thanks for watching. We'll be back tomorrow with more at the same time, same place for your Business Daily. Until then, goodbye.